Hello and welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. Equity markets continue to be close to all-time highs. Debt investments are no longer fetching you very high returns. And then there's always the question around gold and property. The usual question on every investor's mind: how do I create a well-balanced portfolio and how do I build wealth for the long term? Well, this week, Mr. S. Ramakrishnan, Head of Retail Banking and Wealth Management, Hsbc India, and Ravi Menon, who's the CEO at Hsbc Global Asset Management India, join me on the show to provide exactly some insights that will help us answer those questions. Gentlemen, it's great to have you in the studios here. Thank you so much for taking out the time. So let me start with, a broad question. And Ramki, this one's to you. As you look at the rest of this year, do you see opportunities to make more money? Or do you think that with the market having run up so much, steady is perhaps the best we can get?
No, I think I always see opportunity to make more money. And it does not depend on where the market is. And that's the mistake I guess most people make. Whether the market's at 30,000 or 20 or even higher. The question is, do you have a plan and do you stay committed to the plan? So there are people in this market who will not make money as well, and there are people who will make money. And the reason to make money is not because you know the market very well. It's because you're patient. I think that to me is a big quality that you need to have if you need to make money.
Okay, but it depends on, patient in terms of what? Whether you're in the right stocks, the right funds or not, or are you just being patient and wasting time in the wrong ones? But Ravi, your assessment of how you see this year, how it's opened out so far, and whether there will be a lot of, let's say, easy money to be made?
But as far as India goes, I think I just want to highlight 3 or 4 pointers as to why we believe this is pretty much the commencement of a much more optimistic outlook that we have. Number one, just the global macro perspective. Perhaps for the first time in many years, you're seeing a revival of the global economy across the world. Second, our own policies and processes, procedures, the politics and the certainty which this is giving, of which the biggest is going to be the GST in terms of reforms. Demonetization has been through it. Digitization is continuing. And this is going to lead us clearly to a transformation of a shift into the formal sector. And some of this may sound very macro, but I think it's important to pay attention to some of these trends. And if you accept this trend is a positive and you agree with me that this trend is going to work in our favor, you'll be convinced to invest into this marketplace. Because the flip side is, should I exit at this point of time?
Sure.
Right? And I don't hear anyone saying that at this stage.
No.
There is hesitation in saying, is this the right time to enter the marketplace, talking about timing, which everyone recognizes is very difficult to call. Make money, make income, make wealth. You define the words, 3 different words, but they're very different. And perhaps...
Well, they all sound great as long as you're making them. Money, wealth, fortune, all of them are great sounding words. So this is money, money, money. And obviously we try and keep it interactive. We do have some questions from our viewers which have come in. So I'm going to toss them to you.
Sure.
And I'll read out an email to start off with. This is from one of our viewers, Mr. R.C. Molly. He's 33 years old. He's working in a private company. He says he has savings of about 3 lakh rupees and he wants to invest them diversely in a ratio of 30%, 30% and 40%. 30-30 for 5 years, 40% for 3 years. He's looking at high risk or high return. The risk appetite is moderate, he says. So he says, gentlemen, give me a plan. Now, I wish there was a crystal ball which could give him the perfect plan. But it's just a sort of, an example of the kind of questions that we get, Ramki. So how would you address something like this?
So firstly, I definitely think he's got a lot more in his mind, and he's done a lot of research, which is good. I think that's great. So the right way to go first is, what is your plan? And everyone needs to make a plan. I mean, we started this line about a couple of years back, but it sort of seemed to stick. It's that nobody plans to fail, but you usually fail to plan. and it actually works. So, for example, what do I need to do, let's say 2 years down the line, 3 years down the line, 10 years down the line? What about my family? Very often you find that your plans are not your family's plans. People don't discuss it at home to say, what is it that we need as a family? So once Mr. Mowli, I think I got his name, is that once he gets that plan ready about what he needs in the next 3, 5, 10 years, That's the first step. Second is, I heard him say his risk appetite is moderate, but he wants high returns.
High returns,
we all want that. It doesn't always work. So don't get greedy as well. Who defines risk appetite is another thing. I don't know whether people know how to define risk appetite. My first thing would be get professional help.
Okay, fair enough.
Yeah.
So, Ravi, your thoughts on this, on the concept of knowing your risk appetite and also return. Like him, so many investors want high returns. If you are going the mutual fund way, then what do you tell investors? What is the concept of return when you're looking at a mid-cap fund as opposed to a large-cap fund? How do you define that?
Clearly, there's a contradiction between highest returns and modest risk.
Okay.
Be it equities, be it fixed income, the two go together. One has to be prepared for it. But as Ramki said, I think the starting premise is really on asset allocation, which very simply put is a risk-reward balance, keeping in mind an articulation of your goals, your risk, and your tenor.
Sure. So we're going to take this conversation forward. We've just gotten started, but this whole concept of creating the right asset allocation mix and having the right funds, whether it's debt or equity, we'll get the gentleman from Hsbc India to help us with that. So keep it with us.